Since the 8th of December, natural gas has been bearish and still bearish today. If you're trading with the strategy I do show you here in the backtest, you've been making a nice little return so far. Be careful of this bullish divergence. So looking at natural gas first, on the daily chart, back here on the 3rd of September approximately, when the price broke above the moving averages, and the CCI 150 down here was also above its respective moving average. Now you'll notice since that period, all along that time frame, until at such time as the price broke below the moving average range, according to where that arrow is placed, that also coincides with where the CCI broke below. Now it did break below there, but notice the moving average was still in an uptrend, went up slightly, and then eventually did fall, and that was a result of this bearish divergence on the daily chart. And since then it's been falling. So if you're going along from that point, from the 3rd of September, the back test here from the 3rd on the hourly, you can see there that would have been nice and profitable during that period. And you would have stopped taking long trades, again, when the daily started to break down, indicated by that arrow. And from there, you would have started taking short trades. And what the short trades show is basically same sort of profitability, doing nicely. And again, at the moment, you'll notice here we've got a bullish divergence versus lower lows on the price. So at any point, we may see a price rise. We did draw a target range there, because in our last video, we did stop it there, and that was because of that bullish divergence to that point versus lower lows on the price. Now, since then, the price kept dropping. So what you've got to do now is just keep extending it. We don't trade these divergence. We don't go long. We just use these divergence as a potential exit. So if you're going short during this period, we wait for both the CCI and the price, especially now, wait for the price to break. You might want to take your profits. You can see there the strategy is actually stop trading. So you could possibly wait, and if it does break to the downside again, you take further short trades. So similar story for BOIL on the daily first off in terms of trend. You can see here from I started it, we had a pretty narrow moving average range on the price, and that was consolidating during that period, all those weeks. And you could have taken both long and short positions during that time when you see consolidation. But we would have taken primarily long positions because of the CCI movement there. And that's where we've started here. The CCI was in an uptrend, and about halfway through that consolidation, we started taking long positions. And here on the hourly chart, taking long positions there. You can see there with some average downs, that would have done quite nicely, exiting each trade when the moving average of the price breaks into a downtrend, but also following any potential bearish divergence to exit the trades. Until such time we hit this bearish mode when the CCI breaks below, and so does the price. And we take short trades, as indicated here. Again, taking short trades during the price below the moving average, and so is the CCI coming close to possibly exiting. There's no positions currently held on the short positioning or BOIL. UNG on the daily, again, back here around about the 17th October. That was after this consolidation on the price. Notice here we had a bullish divergence as well versus the price, and the CCI was in an uptrend, so we started taking long trades from there, and that was doing quite nicely until about the 9th of December when it started taking short trades. And here on the back test for the long trades, we would have taken those long trades with the moving averages in an uptrend and closing it out when those moving averages turn down. Again, paying attention to any bearish divergence. Sometimes you just got to take a step back and eyeball. You can see there a double top on the CCI, for example, versus the same period on the price. So higher highs on the price versus double top or lower highs on the CCI, and get ready for an exit. And you would have closed it out somewhere in that period there. That actually extended. And that would extend it to that period there. So always extend it. Don't trade with divergence. Always use them as the exit points. Again, you would have started going short from about the 8th or 9th of December, indicated by the red arrow there I've drawn. And at the short test, back test, again, nice profits. And they're closed out at the moment according to the strategy. And it's a bit hard to see possibly there, but you've got a bullish divergence. Higher lows on the CCI versus the same period, lower lows on the price. So again, that could possibly bounce. Still bearish, don't trade long. Wait for that to break higher possibly. But again, there's no positions open at the moment for the short positioning on that back test. So here, lastly for KOLD, this is obviously the opposite. So we've got short positions from about the 20th of October with the CCI dropping, and you would have taken short trades there. And this is the short back test on the 1 hour period. Again, taking short trades with the downtrend of the moving averages and closing it out when they turn up. Until such time when the daily breaks to the upside on the 10th of December, indicated here on the 1 hour chart. I'll show you the back test for the long positions at 10th of December. Again, taking the long position, you'd still be in a trade with that one. And currently there's no trades, no positions open. If you'd like to get some share trading ideas, why not subscribe to the Patreon page? These are some of the trades we've taken so far this month. And that total return is 4.73% for the month. It's not a bad return for about halfway through the month already, the 17th of December today.
That's pretty good.